Welcome to the Business Reporter's Sustainability Talks. I'm Rachel Hicks. How can the investment community contribute to a healthier planet? That's what we're going to talk about today with Fiona Reynolds from the Principles for Responsible Investment, Morten Nielsen from the BT Pension Scheme, and Ewan Murray from Federated Hermes. So welcome everyone. We're talking about sustainable investment. So let's first of all talk about exactly what sustainable investment means, because it's a very broad word, sustainability, isn't it? So what is sustainability when it comes to investment, Fiona?
Well, sustainability, put simply, is really about the consideration of environmental, social and governance factors into the investment process. So you're thinking about them from a risk point of view. What might environmental risks mean to my portfolio, to my investments? For example, what's climate change going to mean to my long-term investments? And then you think about the opportunities that come from that as well. If we stay on the theme of the environment, for example, it's not just all downside, there's also lots of opportunities when we think about what's the energy mix for the future, what's the technologies we need for the future. So it's taking all of these broader issues and thinking about them in terms of your investments and how they're going to impact them.
So what is the business case for sustainable investment, Morten, in your case?
I mean, for us, it's been very clear that especially climate change poses a real and present risk to our ability to fulfill our promises to our members. So it's gone from something that was a future potential risk to something that's a real and present risk. And because of that, we looked at our core investment principle and changed it from being a finance first, so it's about the performance we gave to the fund, to being about sustainable value creation and long-term value creation. And we set this goal that we would be net zero by 2035. And we also actually asked our members what they thought about this. So for us, it was a big investment risk, big risk to the scheme of being able to fulfill its promises. But we also asked our members, and they said this is something they care about also.
So they were prepared to take that risk?
Yeah, no, they were not prepared to take the climate risk. They were prepared to support us in focusing more on the sustainable value creation and making the environmental and social and governance issues a core part of how we invest.
Ewan, for you, what does sustainable investment look like?
Yeah, I was going to build on what Morten had said, and not to start out being the doom-monger in the room, but actually I would argue it's in some sense it's even bigger than that. It's about our survivability as a species on this planet. So we know that we have already transgressed 3 out of 9 defined planetary boundaries which govern how we can exist on the planet. So it's about how do we adapt to that. It's about how do we mitigate the risks associated with that. And as Morten rightly says, the most pressing one, the one that always gets the headlines, quite rightly in some senses, is climate change. We know perfectly well that estimate current policies have us on target for 2.9 degrees centigrade warming over long-term industrial averages. And pledges and targets get us only to 2.4, and yet climate scientists are telling us that actually even at 2, life has to change quite dramatically. We would expect to see food shortages, we would expect to see unnatural weather creating problems for us. We'd expect to see migration, and even possibly in the worst case, you'd expect to see conflict and war.
But is it really down to business to be addressing climate change in this way, or is this something that government should be taking responsibility for, Fiona?
Well, it has to be everyone moving together. So it needs to be the private sector and the public sector. It needs to be civil society if we're going to solve some of these problems. But I also think about it in terms of a pension fund. So if I'm a member of a pension fund and I'm 25 years old and I'm going off to my first job, I'm going to be invested in that pension fund for probably 50, 60 years, particularly as we're all living longer. So the idea that something like climate change, but many other issues, won't impact those investments is sort of ridiculous if people think they won't. So a pension fund, rather than like a day trader, someone who's just there trading for the day, really needs to be thinking about the short term, of course, but also what's coming down the long term, because they're not just investing for a day, they're investing for 50, 60, 70 years. It's a very different mindset, and it brings in different issues. I also think that if I'm a member of a pension fund, there's no good you making me money as a pension fund, but you're destroying the planet that I'm going to retire into in the process of doing that. It makes no sense. So sustainability really brings the whole thinking about people, profit and planet together. And you can have profits, there's nothing wrong with making money, but you can't do it at the expense of ruining the planet, and you can't do it at the expense of exploiting people. And that's what really trying to make all investment sustainable is about. But we absolutely need government, we absolutely need business, and we need the investment community as well. We've all got to push in the same direction.
So
I think, if I may add, just that we're a very large fund, and therefore we have a very large responsibility also, because we have influence. And if we go and team up with other asset owners and other large asset owners, suddenly we have quite a lot of power. And if we work with BII and Net Zero Asset Alliance and IIGCC and all these organizations, we can have quite a lot of influence, and we feel it's our duty to do that. But I also think it's probably worth just going a little bit deeper into the investments, because as Jon and Fiona said, this is actually, if we don't think about this, we could risk ending up with assets that are stranded, we can't get rid of, that have no value. We could end up, and we've seen that there have been wildfires that have impacted very large assets. So if we're not thinking about this, we could lose a lot of money, and also we would lose out on all the opportunities that are coming out of this, because there are a number of good investment opportunities that are also coming through. So it is that people, planet, profit, as you said, where it's actually it's different agendas, but that can run alongside each other. And we think, especially with climate change, if we don't think like that, we put a lot at risk. Because we're not planning about it, we're not thinking about it, we're not reacting fast enough.
And how have those risks changed?
I mean, in our view, they've changed we started to discuss climate change with our trustees in 2007. And at that point, we were thinking of it as a potential risk to the scheme. And we were starting, with help from Mercer, have these studies where we could roll forward and see what would the impact of climate change be on our returns. So we've been gradually working on this for quite a few years, but I think what has really changed is, the evidence is so clear now. You can see how it's impacting economies. You can see how it's impacting. You said food prices before. It is impacting our lives. So it's impacting our personal lives, where we see in Southern Europe it's getting so hot some places that it's unbearable. We see wildfires, flooding. All of that is coming through, and you can't ignore it anymore.
I think in some ways the risks haven't changed in terms of which risks we're talking about here, but maybe we know they're getting more extreme because we haven't been taking the right action. Our understanding of them has definitely gotten better, and I think the science has coalesced around that. But maybe the most important thing is our awareness of them and the potential risks that are associated. That really has come on leaps and bounds. And I would say even in the last couple of years, during this pandemic, our understanding of S in ESG, the social risks, what it means for us as humans, human capital, labour, education, access to healthcare, all of those things are, they're right in front of us in everyday lives now. And I think, if you're looking for one good thing that's come out of the pandemic, maybe that's it. It's our understanding of the whole gamut of risks is really clear now.
So we're touching a little bit now on what I'd like to talk about in a little bit more depth, which is the environmental, social and governance issues around investing and the investment process. What is the role of ESG issues in investment, and how has that changed, would you say?
Well, I think the role of it, as we've talked about, is really about thinking about risk and opportunity. What are the risks and what are the opportunities? And as a long-term investor, again, coming back to that point about being a long-term investor, that I want to invest in companies that are going to be around for the long term, that are going to provide me value. I don't want to be buying and selling companies every day. I want to be a partner with someone. We know that companies that look after their employees, that look after are good to their customers, protect the environment, don't go off dumping things in the rivers and then get huge fines or have big disasters, as we've seen, like with the BP, etc. in the past. That companies who consider all of these issues are around longer, and they're better bets for long-term investors. So I think that's the role that it plays. Helps you think about what are the good quality companies that I'm going to invest in, and what are the things in the future. How things have changed is, I think that as we were just talking about with climate change, people are much more aware. I mean, scientists have been telling us for decades and decades that we need to be addressing climate change. Now we're leaving it later and later to be actually able to do it, so it's more urgent. And we can all see that. We can all see every year the disasters that happen around the world, floods, fires, more frequent. Things that people used to say that was a once in 100-year disaster. Well, now they're every year. They're every 5 years. So these things all impact us. I also think that things have changed. If you think back, I always think back to sort of the period of the 80s and 90s, and it was a bit of that sort of Wall Street, Gordon Gekko, greed is good sort of mentality. And I think that has changed. It's about how we have a more cohesive society and what role business plays, what role investment plays, what role government plays. And I think that's a good thing. Some people will say that that's about the rise of millennials. I'm not 100% sure that's true, but I do see that they have a different mindset about what they want to buy, how they want to even invest their money.
That's an interesting thought. So, Morten, sorry.
Sorry, but two thoughts on that. It's quite interesting that in our case, our member base is, I think the average age is 60. And actually 2/3 of our members have already retired and still they care. So I think there's actually, this is all generations, but what I think is really interesting about the millennium is that they are, because of social media and all sorts of other things, you see public opinion change very, very quickly. And you see, of course, politicians reacting on that. So suddenly this is moving faster and being much more, in a way, disruptive. And for me, I think the critical thing in all of this is we need to make sure, and I think also the financial industry, amongst others, have a role to play in making sure we're educating people. Because we've lived, for, as you said, for decades knowing that climate change was a problem, and lobbyists and others have managed to not make it a problem that we did anything about. So I think in this world where opinions are shifting very fast, we need to be on our toes with that, but also I think we have a duty to try to educate and make sure it's the facts we're talking about and not just other reactions.
I think also that some of the things that have changed in recent periods was, every year, and we're coming up to this in the UK, having the COP26 conference, which is the annual climate conference. So these happen every year, but 5 years ago we had the Paris Agreement, or just over 5 years ago now. And that was really the first time where governments around the world came together to say, this is what we're doing, this is what we have to address. We're now committing to take action. When governments do that, it's extremely helpful for the business community and the investment community because you've got a direction and everyone then can see that direction. then the government has to set policies about, well, because you can't just say, I'm going to get to net zero by 2050 without thinking you're changing anything. So governments change policies, they change the way, they change building codes, they change a whole lot of things, and then that provides investment to flow. So I do think that the signing of the Paris Agreement was a big change for those who weren't already thinking about these issues. And at the same time, the same year, the UN and governments around the world agreed to the Sustainable Development Goals, which were what are the things that we needed to do to 2030 to make a more sustainable world. They're really all ESG issues. And I think those two things have also helped move the agenda. That is not to say that there's not an incredible long way to go if we're to achieve any of these things.
So in a way, they've legitimised them. They've made them seem more grown up, more acceptable, and on a serious level. What needs to be in place in addition to that endorsement to ensure that ESG factors are properly taken into account, would you say, Ewan?
I think there are many different ways of doing it, is the first thing I would say. So I'm caveating my comments because I'll give you my version, but it is just that, my version. I think the first thing that you probably want is to have whoever's investing your money actually believing in this and investing it in a way that they feel comfortable with, because that ownership to me helps with keeping them accountable for the results that they will eventually produce. So that would be the first thing I would be very keen on. I think the second thing I would be looking for is a genuine framework so that I can see how ESG issues are being properly integrated in the investment process. And that's everywhere, throughout the whole thing. Everything from idea generation through the underlying research and analysis that I'll put into that idea, into how do I then include that in the portfolio alongside everything else? How am I taking ESG considerations into account? Then, of course, once you've got something in a portfolio, you're going to review it on a frequent basis. Am I reviewing the financials and ESG issues alongside each other? They should be ranking equally. And then also, once we start to report back to clients, are we making sure that they have the information that allows them to then make knowledgeable requests of us for future investment? All of that, I think, you can self-assess, but it's helpful also to have independent audit of what you're doing, just to be absolutely straight about it, to avoid no concerns over greenwashing, and then you can look your clients in a straight face and be very comfortable that, yeah, I'm doing what they've asked.
And is this a concern? You've brought it up, but I was going to ask it. Is greenwashing a big concern? Is it something that companies, investment funds can plaster all over their websites, bring the business in, but actually they're not fulfilling?
I think it is a concern. I think actually it's not only greenwashing, it's ESG washing more and more, if you can call it that. And I think I think there is a tendency to compete on telling a good story, but we need substance behind that. And I do think the reporting requirements, as they have evolved from both BII and Stewardship Code and other reporting, the TCFD reporting, is going from a tick box where you just say yes and no to actually being forced to explain what you're doing, which allows more scrutiny and more accountability, as you said. And I think this needs accountability, and you need to make sure we are all across the chain being held to account for working through this seriously.
So if ESG issues become more prominent in investment and sustainability investment, doesn't that lead us to see a situation where investments become more and more similar and therefore the returns on them reduce, and to some degree the projects that one can invest in reduce as well?
I think that's an interesting question, but I think for me, I think it is really thinking through the uniqueness. In our case, when we set this 2035 goal for being net zero, that was a very individual. We assessed what is it that's specific about us? How is it that our portfolio construction, how we set up our portfolio, how is it we design that that gives us the opportunities and risks to do that. So it became a very individual target. And because it became a very individual target, I think there's less risk of that because we're thinking through how we can do that. And also because we have, and this is our view, that stewardship is quite important, that you can actually own a brown asset as long as the management of that asset is working towards a transition plan that you can believe in and that you can hold them to account on getting. So that expands the universe of investments and I think reduces that risk. But if we all take the shortcuts on this, I think you are right, there is a risk. Because then we'll only invest in the companies that already exist that are greener or more ESG friendly instead of investing in some of the companies that really need to change or some of the industries that really need to change.
I think Morten hits the nail on the head, and I'll only add, and this might make me slightly unpopular, but I think it's realistic to assume that going forward we should expect lower financial returns than we have enjoyed historically in the past. Why do I say that? Principally because historically we have not properly priced in market terms the externalities, if you like, or the things that we were taking from nature, for example, or chucking back out into nature that were unpriced. And if you only are interested in financial returns, now that we properly account for those, we should expect lower returns going forward. As Morten quite rightly says, though, this isn't simply about investing in ESG leaders, the best companies out there. There are lots of ways that we can tackle this, and I love the engagement story. For me, that's actually the crux of investing. I don't think, if we're entirely honest, that anybody investing in the secondary market, which is the larger part of the market, is actually doing any real capital allocation or new capital allocation. We're not. We're simply moving pieces around a chessboard that already exist. So the real difference that we make is how we change the nature of those pieces on the chessboard. And that happens through, in my head, through engagement and stewardship.
And I think that there's a lot of people out there who don't understand this piece and the importance of it in sustainable investing, because you can say, well, what you're saying that you're an ESG fund or an organisation that takes this into consideration, but you still hold some fossil fuels. So how can this be true? But if I sell my fossil fuel shares to you and you don't care about these issues, nothing's happened to change what's happening in the atmosphere or to change climate change. All it means is I've sold it to you. It's still there. But if we are able as investors, and big major investors invested across the whole economy, we've got power that individuals don't have, to change that company and take it from a fossil fuel company to a renewable energy company, that company's been saved for the people who work in it, for the shareholders, and it's better for the atmosphere as well. It's a win-win. We've actually done something. If I can just use as a quick example, I was working with an organisation, or an organisation had contacted me, a group who were very concerned about a coal mine that was going to be built in their community. And one of the PRI signatories was an investor in this coal mine. And how could they be a PRI signatory? They wanted this not to go ahead. Our signatory actually ended up selling the coal mine. But now the activists have contacted me and said, but someone else has bought it and they're still going to develop it. So how can this happen? And I said, but this is part of the story. If you want, this is what you wanted, this is what you were wanting. But it hasn't changed the outcome. It's just changed the person who holds it.
Wouldn't the cynics say that it's harder to sell an ESG fund with little or no track record and easier to sell a fund that has some brown investments, which the traditional investors will know will have returns, and you say you're going to make a difference, but are you?
But I think again it's the accountability point, because if we have some investments in some large American utility companies that are brown. They have very strong commitments to reduce their emissions by up to 80% by 2030. That gives us comfort. We can invest in them and we can see the progress they're making. But if they were not making that progress, we would have to put a lot of pressure on on that happening, and if they didn't do it, eventually we would have to divest. But that's where I think we would be held accountable for whether we were actually a good steward and whether we were actually using our power to engage, and whether there was any reality behind that. But I do think people should be skeptical, and I think they should hold us to account and hold the companies to account, because I don't think you should be able to give these empty promises. But of course, you also have to accept that you know, some of these issues are difficult. So you might not be able to follow a complete linear line to completing those transition plans. But you have to be able to show you're putting enough effort in and that you're actually making progress.
Let me move this to the future, because we just have a few more minutes left. How will sustainable investment develop in the future here in the UK and globally, Fiona?
Well, it's just continuing to develop. I always say that one of the difficulties about the ESG space is that nothing ever comes off the list, so nothing's ever done. The list just keeps growing of the issues. So first of all, I think the issues will continue to grow that investors are considering, and that's a heavy load for investors, I've got to say. But I also think the depth of the work that they're doing and is continuing to change as well. So they're doing it, it's not just about, oh, I'll engage with a few companies, tick a few boxes. It's really thinking about, how do I bring about change? So when I started working in this place, just as an example, investors used to think about, what are the ESG risks on my portfolio? And that was their frame of reference. They still do that, but they also now think about, and what risk does my portfolio have in the real world? How is it impacting the real world? How's it impacting my members that I'm saving for their retirement? And I think that is a big mindset shift for some people in the investment community.
Ewan, how do you see things developing?
So, slightly controversial, I'll go even further and say there will be no investing unless it is sustainable in the future. And if we don't achieve that, then I think we're probably in a horrible place.
When do you see that time coming? When people will not invest unless it's sustainable?
We're going to know by the end of this decade roughly what we're on target for as a planet in terms of warming. And that really is, at that point, our ability to hit 1.5 degrees, we will know almost certainly whether we'll make it or not. And if you want a horror story for your evening, go and look at the difference between 1.5 and 2 and the differences between those two temperatures. It's quite sobering. We aren't going to do this on our own. It's not just an investing story, of course. It's about, as we said at the beginning, it's about regulation, it's about policy, and it needs everybody. Every single actor in the piece here now needs to take their place on the stage and to act.
Morten, what will drive these developments?
I think it will be driven by increased interest from all stakeholders, that suddenly everyone is actually very interested in it. And with climate change and many of the other ESG topics, it becomes very personal. If I may start just with saying also my fear in all of this, I must admit my fear is a bit like Fiona was saying, that we end up trying, and there will be a lot of pressure from all sorts of groups in trying to solve every problem on Earth, and that will create a lot of talk, and it will divert a lot of resource from actually doing what we can to fix the biggest issues and starting in a priority order. So that's my fear, but I do think we are going towards a world where the impact of our investments will be measured alongside our returns, and that will just be part of it, and our stakeholders will be very interested in that. I also think, if I'm saying that the one objective that has gained most positivity internally in our business has been this net zero goal. Every one of our employees have been really excited about it and started to think about what can I do, what can we do as a business. A lot of talk about what we can do individually and all of that. So I think there's so much good momentum behind the ESG debate in general, and it's something that people care about. and they care about it, next to all the business priorities you have.
So finally, who are the key stakeholders in the future development of sustainable investment?
Well, I think obviously it's society, so it's the members of pension funds, those who choose to make how they invest, but it's also the investment and business community and its government. Again, there's not one area, there's not one group. It's really a whole societal approach that I think really comes from the fact that if you look at the world today, we're hurtling towards 3 degrees of warming. Inequality is out of control in many countries around the world. And we've just had a pandemic, and you can say with the pandemic that part of that is because of these issues that we're taking over habitat, we've moved into areas where animals used to be, that these things are happening around the world, and people are looking at it and saying there's got to be a better way that we live. And that's really for all of us to solve.
Ewan?
Fiona's absolutely right. If anything, I'll boil it down to one group, and that's us as individuals. I say that because at the end of the day, we are electors, voters, we are taxpayers, we are savers, we are pensioners. We can exercise our rights to make change.
Martin.
And I just think that the inequality point you're raising is probably the second biggest problem we have, because if we don't address that, then this will not fly. And climate change again, and actually all of the ACE issues are hurting the people with the least money the hardest. And I think that unfairness will become an increasing problem. And if that's not addressed, I think it will create all sorts of horrible outcomes. So I think I think we're all stakeholders, but I think actually there needs to be a bit more, perhaps the word is solidarity, around actually fixing these problems, because it's not just something where you can say we in the richer part of the world will just fix our bit. This is a global issue, and it will cost everyone quite a bit to get this right, I think. But if we do that, we have a much more interesting future ahead of us.
Ewan, what is the business case for sustainable investment?
I agree entirely with what Morten said, but if I can broaden that out to say that this is a question of our ability to survive on the planet. We already know that we are in breach of several of the planetary boundaries that have been identified. And obviously the most obvious and talked about one is our climate change. The UN Secretary General himself said recently we're on track for 2.7 degrees over the long-term industrial average. And others have estimated that current policies put us about 2.9 over, and actually pledges and targets only get us to 2.4 over. Either way, we face a very different world to the world that we live in today.
Fiona, we've talked a lot about the environment. Let's have a look at social. Tell me a little bit about just transition and how that works.
Sure. When we're thinking about environmental issues, we also have to think about the fact that this is a transition. So it's not something that's just happening overnight. It is a transition to a low carbon economy. But within that, we know that where there's going to be communities who rely on a coal mine or a gas plant or other fossil fuels who potentially get left without work unless those can be changed. And so we need to not leave those people behind. If we think in the UK back to the 70s when coal mines were closed, some of those areas are still decimated today. We can't have that. So we have to plan for the future. We know it's going to happen. We have to think about the social issues. We have to think about what can happen in those regions, what new investments can happen. How do the companies that are there make sure that they're retraining workers, that there's other opportunities? And so it's bringing all of these issues together. I sometimes say about ESG issues that one of the problems is people can sometimes think about them in a silo, think about them as an environmental issue or a social issue or a governance issue, but really they're all interconnected, and you need to think about them through a number of different lenses. We will create more problems if we don't have a just transition, one that doesn't make the workers of the world in the fossil fuel sector the people who get left behind and pay the price of climate change.
And are you satisfied that there is a sufficient just transition procedure in place?
There's a lot of work going on. There's a lot of discussion. I think more countries around the world are doing much better at this than they have in the past, but I still think there's a lot to do. But everyone is coming together around the agenda. A just transition is part of and named in the Paris Agreement, so that's important.
And if you were to name winners and losers, I mean literally, and I don't mean in the transition, I mean who are doing it well and who are not doing it well, who's succeeding in implementing just transition successfully and who's failing?
Well, I think that if I looked at the German government, I'm not saying that they've done everything right, but I think they have planned for a just transition because they've got a lot of coal mines. They're doing some parts well of closing things down at different stages, moving workers, thinking about new investment. If I think about who's doing it badly, I live in the UK, but I'm from Australia, haven't even committed to a net zero by 2050 because it doesn't want to think about what it's going to mean for its fossil fuel industry. It's a big exporter. But that means it's not thinking about what the jobs are for tomorrow, what's the industries of tomorrow that we need to be creating. And we need to be creating them now. This doesn't happen. You don't create new industries overnight. You don't decarbonise your economy overnight. So if you just bury your head in the sand and say, I'll take a populist view and just say, I'm not closing anything, you're just delaying the problem till tomorrow and for somebody else. And then there's much more for them to do.
Morten, if we're looking at ESG investment issues, if everybody tries to follow the same kind of investment, doesn't that mean that it all becomes too similar and the returns decrease?
I think where I think there's need for consistency and need to do things the same way is on the reporting side of it. So we're all reporting against the same standards and we're improving those standards all the time. And I do think there is a risk of us all doing the same if we don't take it seriously to look at what is it we can do and what is our unique opportunities and risks in it. And in our scheme, we set our 2035 target to become net zero because we are reinvesting the vast majority of our assets in this period because all our members will have retired by 2035 and need income related or income matching. We need income matching assets for that. That gives us a very unique opportunity to have a very ambitious target. It gives us a very unique opportunity to think differently in how we invest. And I think also it is making sure that we keep the universe open and think about what has an impact. And for us, that also means that we are willing to invest in brown assets as long as we can see they're on a transition path to a low carbon business model, and that we believe helps the planet. It also gives us opportunity to actually invest in companies that could become very, very valuable because they're going through this transition, and if they do that well, they will be the winners of their industry, and that allows us to keep our investment universe quite broad and invest in all industries. As long as we can see that they're actually changing and as long as we can hold them to account that they're actually changing.
So Ewan, imagine I have a bag of 100 million euros with me today. What would you like to see it spent on?
I'm going to split my pot into two. Half of it is going to go into a sustainable linked bond. Why a sustainable linked bond? Because those are bonds that have a very defined green outcome, and the interest rate changes depending on the success of achievement of that outcome over time. So I think they're a great way to invest, and my hope is that all fixed income investment eventually moves to sustainable linked investment. The other 50 million I'm going to contribute to one of the developing countries, because we know from Paris 6 years ago that there's a requirement for climate finance to help them in their transition. And in the West, in the developed world, we haven't been meeting that requirement. And it's essential that we're all in this together, that they need to do their piece as well.
So you're going to let a government off the hook?
It was a magic 50 million.
Fiona, what are you going to do with your 100 million euros?
Sure, so I'm going to invest it in some of it in climate solutions. So what's the technologies that we need for the future? What's the energy of the future? Because I believe that's how I'm going to make the most money. But I think that we're also going to create lots of new green jobs and the jobs we need for the future. So win-win situation. And I'd also put money in emerging markets because that is where we need to see development as well. And personally, I'd also be putting some money in some women-led businesses because I think that research shows that, you know, women-led organisations do well.
Fiona, thank you. Morten, there's a pot of gold. What are you going to do with 100 million euros?
I would like to invest a lot of it in new technologies that are supporting this transition, especially this climate transition. I don't think there are enough of them right now, and I think quite a few of them are too early stage. But I would like to find a way to invest a fair bit in that, and then I would really like to pick these companies that are established and are smart in the way they think about how they can become leaders in their industries and actually change industries that are not doing very well on ESG topics. I'd like to try to pick those leaders if I could.
Well, I have to break it to you, I don't have the money. But let's hope some of this does come to pass. And thank you all for your time on the roundtable today.
Thank you.
Thank you.
Thank you.